Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup as well as the market strategies you need to follow for this session. Now remember, this week, which is a truncated one, began on a strong note. We did see the Nifty also rising by almost 100 points in yesterday's trade. We inched closer to the 25,000 mark. In fact, crossed over that level on the intraday levels as well. But we did see some resistance and some pressure on those high levels yet again. Now today's session again is going to be an important one for the Nifty. Remember, on multiple counts there is going to be caution that's likely to prevail on most fronts. Remember, tomorrow is a market holiday on account of Ganesh Chaturthi, but tomorrow is also the day when the 50% tariffs threatened by Donald Trump administration will most likely take effect. Remember, Donald Trump administration has already notified the imposition of additional 25% tariffs on imports on India, which could take effect from 12:01 a.m. on August 27. So that's most likely taking place. Now let's also look at what else has happened on the overnight trading session as far as the US is concerned, and thereby what's happening in the Asia markets this morning. So the US president has also fired Federal Reserve Governor Lisa Cook. Now Trump's removal of Cook could be challenged in courts going forward from here, but that's definitely one talking point, and that's also led to the US equities losing some steam, closing modestly lower in trade. So most part of the Friday's rally and gains that were being seen on the Wall Street were wiped out in Monday's trading session. S&P was down by about 0.5%. Nasdaq ended closer by negative 0.2% lower. Even when we look at some of the stocks that were in focus, Nvidia was definitely in focus. It's ahead of its earnings reports that come in tomorrow, and that's the stock that's likely to drive the tech stocks on the Nasdaq all through today and tomorrow as well. Now, when we talk about the Asia markets, they also slipped in tandem with the dollar as well as the US markets. There's also this feud between US President Donald Trump and the Federal Reserve that's intensified, and that is going to be keeping the currency markets and the bond markets on the edge as well. Now, the MSCI EC Asia Pacific was down by about 0.7%. We did see a lot of declines across the Asia markets this morning. Nikkei was down by over 1%. South Korea this morning was down by 0.8% or so. Across the broad index base, you can actually see a sea of red. 0.2% even fall for the Hang Seng, that's the Hong Kong index. China also down by 0.1%. And the GIFT Nifty, that's indicative of a start of how Indian markets will perform today, is also indicating a mild negative start at 24,906 odd level. So let's see how they are going to be really panning out in trade. Remember, this trading session is right ahead of the truncated holiday, and that might keep some sentiments in check as well. Now, of course, we also will be looking at a whole host of stocks that will be in focus today. A lot of secondary as well as primary market action that will be in focus as well. Let's actually look at, first of all, the main board IPO space. D Street is gearing up for 4 listings, including Shriji Shipping, Global. We'll also look at Gem Aromatics and even Vikram Solar and Patel Retail. Meanwhile, the IPOs of Anlon Healthcare and Vikram Engineering will open for subscription. So keep an eye out on the entire IPO space as well. Now, in the secondary markets, we have a lot of stocks that you could definitely keep an eye out on. To start off with, I'm going to be keeping an eye out on Paytm. That's 197 Communication, the parent company of Paytm. The company's board has now approved additional investments in its 2 wholly owned subsidiaries. That's Paytm Money and also Paytm Services Limited. Remember, this is also coming in as Paytm has clarified that it's exiting any sorts of deals with any RMG or positions that it used to have in any real money gaming, and it's going to be reinvesting all that money in Paytm Money as well as Paytm Services through a rights issue of about 300 odd crore rupees and 155 crore rupees respectively for both these firms. And these investments, however, are subject to some necessary approvals as well. Let's look at the auto pack. I'm looking at Tata Motors here. The NCLT, that's the National Company Law Tribunal, the Mumbai bench, has now approved the composite scheme of arrangement among Tata Motors Limited, that's TML, also Tata Motors Limited Commercial Vehicles Limited, TML Commercial Vehicles Limited will be TEMLCV, remember, and also Tata Motors Passenger Vehicles. So there's going to be an arrangement that's been approved here along with their respective shareholders. shareholders. So keep an eye out on that. Remember, we've been already talking about for a far long time that Tata Motors is consistently in focus because of its plan of separately coming out with its commercial vehicles division, and maybe there will be plan to separately list that as well. Now let's look at the hospitality space. Lemon Tree Hotels is in focus today. The company has already announced a signing of a licensing agreement for a new property, Key Select by Lemon Tree Hotels. That's in Nashik. The hotel, managed by Carnation Hotels, which is a wholly owned subsidiary of the company, will feature 50 well-appointed rooms, a restaurant, banquet facility as well. So that's going to keep the stock of Lemon Tree Hotels in focus today. Let's also look at Sai Life Sciences as well from the healthcare pack. We are hearing that TPG Asia 7SF is expected to exit the company by selling its entire 14.7% stake, comprising of over 3 crore equity shares through block deals. So keep that stock in mind today. The offer size is estimated at 2,500 crore rupees with a floor price of 860 rupees per share. These are as per the reports that are being reflected to us. From the banking space, keep an eye out on the banks like UCO Bank, Indian Overseas, Central Bank of India, even Punjab and Sindh Bank. The PSU banks are going to be largely in focus. Why? Because there are some reports that are indicating, which are unconfirmed reports for now, that the government of India may have appointed Goldman Sachs as the sole banker for the proposed stake sales in 4 of these public sector banks. Now keep an eye out on these public sector banks because they could be in focus because of the divestment of government stake there. Already some managers on the brokerage levels and global level are being selected for the same. Let's also look at some of the recently listed stocks. Protean eGov, that's another stock that I'm going to be very closely watching today. The company has received a work order as on August 25 from Unique Identification Authority of India, that's UIDAI. That's to provide services as a service provider for establishing and for running district level Aadhaar Seva Kendras. That's worth approximately 1160 odd crore rupees. So keep an eye out on Protean eGov on that respect as well. We're also looking at a lot of brokerage houses updates that are coming in this morning. So let's keep an eye out on Titan, for instance, from the consumer durable space, the watches to jewelry maker, and to eyewear maker as well. So let's quickly look at Bernstein's report. They have initiated an outperform rating with a target price of 4,200 for Titan. They believe Titan is best placed to capture increasing formalization and contemporization of jewelry demand in India. While Titan has a storied legacy of 23% EPS CAGR for 2 decades, it trades at a 5-year low PE. That's due to 3 controversies and of course rapid gold prices, increase in the jewelry demand is becoming more formal, contemporary and competition is rising. We're also seeing natural diamond vis-a-vis the lab-grown diamond dynamics. There's also a forecast of 18% revenue and 25% EBIT CAGR from FY25 to FY28. So that's going to be keeping the stock in focus as far as Titan is concerned. Substantial uptick from the current upside potential from the current market prices, what they're looking at. Let's also look at the retail space, again from the consumption theme that we are looking at. Avenue Supermart, the parent company of D-Mart retail chains, is going to be in focus, promoted by Radhakrishnan Damani. CLSA is coming out with a report here. They have a high conviction on the stock and an outperforming rating is what they have given. A target price of 6,406. They believe D-Mart's winning edge is on ratings and as far as engagement is concerned, consistently lower prices that the company is focused on, assortment. These are the keys to D-Mart's success. They also believe that valuations do not reflect the faster pace of its store additions so far. Its push into the private labels and strengthening of its profitability moat is also something they are betting big on. It's 9 a.m. and you look at the pre-open rates that are ticking in front of you, 24,947, 20 points lower in trade for the Nifty as of now. Just as how the GIFT Nifty was pointing out, a mild negative start is what you could hope for. This is what is being indicated in the pre-open trade as well. Now, of course, we'll be looking at, now you can see 25,000 back on the screens, as far as the Nifty is concerned, about a 43 points uptick that is continuing from yesterday's move. If it turns out positive and opens with a gap up like this, it will be seen as a real bullish trend that continues despite all the overhang of tariffs that we are awaiting to be hit on India tomorrow. So we'll have to keep an eye out on it, whether there will be increased amount of volatility or will the bulls shrug all these concerns and move on with the kind of smart gains that we have been seeing over the last couple of sessions and weeks as well. Now let's talk about some more stock ideas that you could be looking at from the auto space. I'm again looking at a Hyundai, for instance. Here Citi has come out with a report, and you can clearly see there's a buy rating and a target price of 2400 that we are getting to see. Now they do believe the Hyundai Motors management is talking and taking following initiatives to boost market share, and they include product portfolio enhancement. That means, refreshes as well. We could be seeing on some of the existing models. They're also looking at network expansion, especially in the rural areas. They're also bullish on more brand strengthening activities as well. There's also competitive pricing. And one could also look at the company re-rating its model launch pipeline as well, with about 26 launches in the next 5 years, and also maintains a double-digit EBITDA margin guidance for FY26 as well. So these are all the factors that could actually lead to Hyundai Motor continuously buzzing in trade. Right now, they have a 25 or 2400 target. The last trading price was 24,720, 2472. Let's look at Anthem Biosciences. That's another one that you could keep an eye out on. That's JP Morgan's report on this one. They've initiated coverage on Anthem Bio, recently listed stock, with an initiation of a neutral rating and a target price of 820. They believe the company is innovation-led, tech-focused CRDMO company with leading capabilities in small molecule and fermentation manufacturing, and now is expanding into high-growth segments such as the ADCs, peptides, oligonucleotide as well, forecasting a 26% EPS CAGR over FY25 to FY28 as well. So those are some of the key reports that you could be looking at. Let's welcome our guest on board. Mr. Vinit Bolinjkar is joining in on the program with us, Head of Research at Ventura Securities. Welcome to you, sir. Thank you so much for taking the time out. First up, your sense on the current recovery in the markets and whether that will sustain, because we now have an overhang of the additional tariffs of 25%, which have been notified by Donald Trump to be in place tomorrow, which will be our own holiday on account of Ganesh Chaturthi. So how do you expect the markets that were on course to recover to react to that?
So we have been quite pessimistic about the scenario going forward, and in spite of that, now what we've seen is some very encouraging news come across from various parts of the globe. So countries like UAE, Japan, Russia are very sensitive and accommodative of the situation, and they've actually asked us to, you know, export to them whatever we can in textiles. So that's very encouraging. Second is, the ministries are working at war footing to diversify across almost 50 markets have been identified. And we are also looking at an ASEAN market, some kind of pact with them. So, from the reversal last year, we are going back to that. And, China has also offered to open its market to us. So things are pretty hunky-dory currently in terms of situation, and we have to understand how far we can mitigate, how fast we can mitigate this debacle. Because with the kind of tariffs that are coming, exports to the US are completely going to stop. The question now is whether uh, Trump will stop at these or proceed further, because they've also threatened to take away our uh, the confiscate our reserves. So, but that's, I think, an extreme move, and I don't think that will be done. And it will not impact India too much, because all our reserves are only not in dollars; they are in they're a basket of currencies. So, to that extent, we have been quite uh, sensitive to that issue. So, limited, uh, you know. downside is now what I feel. And with there is that strong gap on Nifty which we have not filled up. So if we are able to maintain that stance of 24,900, not going below that, then I think it will be very encouraging for the markets. But if we fill up that gap, then things could on the stock market front prove to be that this situation could still linger around for a while.
Right. So, Mr. Bolinjkar, help us understand in this kind of a scenario, which are the pockets that are emerging, safer pockets for retail investors to continue investing in and not worrying about all this noise and the changing world dynamics?
So I think you should be very focused on the agrochemical space, fertilizers. Second is the vehicle finance is also going to be a very strong play. Uh, Russia has been importing mostly Chinese cars, and with our uh, and so there we have a chance, and I think there is a very strong indications that our exports to Russia in terms of cars would pick up. So that's a very big market, and it's a very high value segment. So we can diversify our segments very fast. So we like the this, and we have seen how the market likes new models coming in. So Hyundai, Maruti, and M&M are some of our strong favorites for these markets going ahead. Other areas where one can focus is on gold lending uh, and the mining segment. So these are some of the places that we like.
So, Maruti M&M you've chosen within the auto basket that could clearly benefit from rising exports. What about the
Hyundai also.
Hyundai also? Okay, Hyundai also.
Yeah.
So, there are three stock ideas from the auto basket that you've clearly marked out. Let's talk about the agro fertilizers chemical space that you've been talking about. Any key stocks that you're looking at here that could be on the radar?
So Paradeep Phosphate, we like UPL, Jambal Fertilizers is looking good. Hiramba is there. So these are some of the stocks that look good for us.
And vehicle finance, would you continue to stick with the Shriram Finance or there are other stock ideas there too?
So there are some smaller ones which we are still exploring. So we'll
Okay.
talk about them for the time being.
Okay, fair point. Let's also talk about, the kind of, theme that we've been working with over the last 1.5 weeks, or is the GST related theme that's pushed up a lot of course, auto space like you talked about, and a lot of consumption oriented sectors as well. FMCG, consumer durables, retail, for instance, all of that has been on the bus. Looking at this bonanza also coming in sooner than expected now. We are looking at the 3rd, 4th September meeting of GST Council that will finally put the stamp on what exactly will be the slab structure, what will be the newer rates, and of course, how will most of the sectors now benefit from lower rates as well. Do you think this is an ongoing theme, or most of the good news is already priced in? How would you look at an FMCG, consumer durables, or a retail space right now, sir?
So I have a very interesting observation to do.
Sure.
Is that the maid that works in my house? She just came and told me that I'm waiting for these GST reforms to be come into place, and that is talking about the pent up demand. So she wants to buy a refrigerator and she wants to buy a new color television. So if that kind of awareness is there even at the grassroots levels, then you are going to see this entire GST boom uh, grow beyond our imagination. So it could be a very, very strong sustainable trend, number one. But more important, what I liked in the consumer, which everyone is missing, is that the post offices are now going to be a part of the mutual fund distribution chain. So when you have so many postmen talking about new investment ideas other than Kisan Vikas Patra and national savings schemes and suggesting this thing to buy, I think the AMC space is going to be another one which is going to ratchet completely. So we have got some very strong things playing out, and that seems very, very interesting.
Fantastic. So let's break it down for our all our viewers to really see where can they find value and sustained opportunities to buy. And of course, if you could also highlight for us, do you really feel that this festive season is going to be far better than the last few festive seasons that we've actually seen, because all that deferred purchase is going to kickstart from maybe September end, the Navratri, and of course we'll see Dashera. So September second half and October full is likely to see a big boost on the festive season as well. And which are the areas that you feel will benefit the most?
It's very important that the GST Council agree on all the terms, because there are states and they have their own agendas, they have their
Yeah.
own political agendas. So it's very important to see through that uh, you know this GST thing goes through. It's very, very important. So that is one area which we need to watch. And post that, one can definitely, go and buy into the stocks that we have discussed so far.
Okay. Tell me, within the consumer durables basket, sir, what is your favorite pick there?
So I think within the consumer durable basket, I think Aditya Vision is one stock which is there, which is got a monopoly in the state of Bihar. And, we are going to see Bihar go into elections, and if the election trends are positive, then that trend can sustain even further. So that it's a distributor of consumer goods, durables.
Okay. Okay.
We also like the other consumer plays which are there in the
Hmm.
durable space.
Hmm.
Uh, Amber, those who manufacture Dixon, they would do well. Other than these, if you come to the FMCG proper, I think their lever has done a lot of restructuring. Marico has gained a lot of market share. Uh, and Tata Tea could be possible plays going ahead. But Tata Tea valuations are quite expensive. But they always remain so. And they have a nice portfolio which is growing fast and dragging the entire thing upward. But there the only valuation remains a concern.
Fantastic. Okay, let's also welcome our other guest on the panel. We have Arpit Beriwal, Analyst Derivatives Wealth Management at Motilal Oswal Financial Services, now with us. Arpit, hi. Warm welcome. Good morning to you. Your, take on the market today on the Nifty strategy?
Very good morning to all. So if you talk about Nifty, if you look at the structure on the weekly and the daily time frame, last week has seen some recovery from the lower levels in the last week. However, Friday session was again a subdued where we see some index got stuck in a range. So look at the Nifty structure on the immediate basis. We expected the Nifty's consolidate likely to be in a range between 24,800 to 25,150 levels. So 24,800, 850 is a major gap area that is likely to act as a major support levels. But at the same time, 25,100 is a major call writing levels are intact. So I think Nifty as the index is likely to consolidate within this range because sector specific action is seen. Yesterday it was held by IT sector, whereas banking sector was relatively underperforming. So going forward, I sense that 24,800 is a major support. On the upside, 2550 is the hurdle zone, and index is likely to consolidate within this band.
Okay, got that. Let's start looking at the markets which have started to take on the back foot today. 24,897. We've swiftly moved below the 24,900 odd mark right at the open today. All the sectors, in fact, are starting with some losses. Despite the fact that India VIX is also down by 2.5%. IT, which was the top winner yesterday, is seeing some profits being taken off, 0.2% lower. Pharma is down by 0.3%. You can also look at mid and small caps that are trading lower in trade. On the Nifty, you only have a few stocks, handful of them that are higher. SBI Life, Titan and M&M as among those top movers. Rest of them are in fact seeing some losses build up. Let me look at the F&O space. Grasim is up by about 1%. 361 WAM is improving, RBL Bank, Britannia and Avenue Supermarts and even KPIT Technologies. Those are the stocks that are still higher in trade. Let's look at HDFC Bank, now trading ex bonus. So 987 is the current level. Remember, this is in case you had bought the stock of HDFC Bank till yesterday and you have the stock in your portfolios. Only then you will be benefited with this 1:1 bonus. And don't look at this 50% negative. It will get adjusted because this is the price after X bonus that we are seeing right now. Let me quickly bring in Vinit here. HDFC Bank is clearly going to be in focus because the stock has turned X bonus. For those who have the stock in their portfolio, Vinit, how would you explain to them what's next coming in? Now, what we have seen is then when these big conglomerates, announce any corporate actions with respect to stock splits or bonus, there is some knee jerk in the near term, and thereafter it takes some time to stabilize as well. How would you look at this opportunity of looking at HDFC Bank yet again in 3 digits? And of course, what should one do if they hold this stock?
Yeah, so for retail investors, the price gets more affordable, but fundamentals actually don't change. But more than this, I think HDFC as a fundamental stock will see things get better down the road. However, aggressive growth is going to take a little bit of time. So you have to remain invested. But these are the times when you should be buying, blue chips like HDFC, which have proven to be strong growth stories over the long run.
Absolutely. I'll also ask Arpit, would you be able to share a view on technically what should be done on day one of this ex bonus price on HDFC Bank?
Sakshi, if you see overall the structure of HDFC Bank from last almost 10 to 11 weeks, it has been trading in a broader range. So as we've seen a corporate action, so now the revised levels, if we see HDFC Bank is trading near its lower band, that is around 965, 970 is the major support levels. But definitely on the daily and the weekly side time frame, upside is cap. So I sense that Bank Nifty and HDFC Bank particularly is likely to consolidate with cap upside. On the immediate basis, 970, 965 would be a major support zone. If closes below that, then we can see some cool off in the HDFC Bank towards 955, 960 levels. So overall cap upside with some downside open for next couple of sessions.
Okay, fair point. I hope this is also given a broader sense to all our viewers who are looking at HDFC Bank afresh once the stock is turned ex bonus. So in case you invest afresh today, you will not get the benefit of bonus issue, but yes, you're looking at a price which is into 3 digits rather than yesterday's 4 digits as of now. But of course, look at it valuation wise. This is just a benefit of the bonus split that you are seeing. Let me also look at the Nifty yet again. 108 points lower at 24,855. Only FMCG has started to move on the higher side. So among the top movers, you have Nestle, Britannia that's moved up. You also have some auto stocks, Eicher, Bajaj Auto, Hero. All two-wheelers are up as well. So let's get this one going. Vinit, how would you look at the pure play FMCG names like Nestle, Britannia, ITC? What's the opportunity here that you find?
So ITC would be negatively impacted due to GST and the sin tax going up to 40% as is proposed. Uh, but apart from that, I think HDFC and Nestle has announced a very strong capex plan over the next 5 years. When they had done this, the previous time we had seen the stock really move very quite nicely. So if you buy these stocks, you need to hold on to them and be very patient about it.
Okay, fair point. Let me also just ask Arpit to help us understand what do we do with these two-wheeler names that are buzzing in trade, and which one is appealing to you more for trading perspective, Hero, Eicher or Bajaj at this point?
So actually, if we see overall the auto index in a strong uptrend, and after the news of the GST, we've seen a very strong gap up in the previous week, and post that index was consolidating. Yesterday, we have again seen some recovery from the lower levels, and within that, if you look at the chart structure of Hero Motocorp, so that has been a very strong counter. So if you look at the setup on the monthly scale, a strong bullish candle that has been formed and holding its gains. On the weekly setup, higher highs, higher low structure is intact. On the daily scale, it has taken support near its 5,000 levels, and I think from a risk reward perspective, definitely it offers a better opportunity. So Hero Motocorp would be a preferred pick.
Okay.
5,088 is the level going forward. 4,980 would be a support zone. Upside 50 to 100, 50, 300 can be seen eventually going forward.
Okay, fair point. Sai Life Sciences, which we'd marked out, is in focus. 3 crore shares have exchanged charged at 15.4% of equity worth 2,810 odd crore rupees at 874 levels has exchanged hands. So keep an eye out on that. 3.9% lower is how the stock is really moving. But look at Protein eGov, which I had marked out for a big order win from UIDAI. There's a 9% rally on Protein eGov on that stock. BLS International Services also buzzing on the positive end with an order win coming in for this stock. Vinit, have you been looking at Protein eGov? Is this a space that interests you at all? Purely interested in data and, like getting a lot of orders from government-based agencies now?
Actually, we had a buy on the stock, but after that, the stock really got smashed.
Yes.
We remain a little bit circumspect about the management's ability to, add value. Currently, the current streams are also under threat of dominance that they have. So right now, not recommending it, to be honest.
Not recommending it for now at least. Let me look at the broader markets, viewers, to help you understand if there is any key name that you could be looking at here in trades today. Edelweiss Financial Services is up 4% higher. That's the one that is clearly buzzing from the Nifty 500 basket. Then you also have some other names like HUV or Protein. We've already marked out. Vibhor Steel Tubes is another one that's buzzing. Kesoram Industries is buzzing. Far and few between names that we don't often discuss. Those are the names that are actually, buzzing at this point in time. So not too many names. I think on the downside, you still have Vodafone Idea that's down by 5.8%. Remember, the stock was hovering higher for the last couple of sessions with the hopes that ADR dues could be waived off. But today there is some denying on that fact that one of the ministers has given, and therefore the stock is continuing to be under pressure, at least at this point in time as well. But clearly, a lot of spaces that are buzzing are including FMCG space. The paper stocks that were higher are also seeing some mild profit taking in trade today. Clearly, the FMCG auto space, those are the pockets that are buzzing clearly in trade. Let me get in Vinit here to talk about, overall the sentiments that are improving for India with respect to a lot of ratings upgrades that we are getting. It was S&P that started off, which followed. How are you looking at that aspect? How is it likely to impact the overall economy and market sentiment at large, Vinit?
Can you please repeat your question?
I wanted to ask you on the ratings upgrades that India is getting from S&P. We got one upgrade. Then Fitch also upgraded India's economy at this point in time. There are growth forecasts that are also seeing some improvements there. So how do you expect the overall impact on the economy and the market sentiments?
So it's, in a topsy-turvy world, I think this is a very strong, uh, boost to our economy. Our costs are going to go down eventually of borrowings, and that is going to help us in the long run.
I also wanted to ask you with respect to the FII outflows, do you think that gets changed because of the ratings upgrades for India? Is there any case for FIIs to return back? And right now, we'll just look at the Nifty also. It slipped below 24,800. Just keep an eye. The markets are slipping a little bit further. I'll come to Arpit in a bit. But how do you see, Vinit, the FII outflows? Will they reverse? Is there any sign there?
See, there is an event on the US markets which is quite negative in the sense that, the rates need to come down, they need to replenish, or roll over their debt, and there is no cash in the banking system. This Trump has made huge announcements globally that, so many $1 trillion will come into the US economy. Not a single country has signed a deal on the dotted line. None of their governments have ratified that. So, they are going to get cash strapped. There is going to be a credit event in the US. They might have to go in for an IMF bailout, and things are not very bright. And that is one of the things which is going to cause a domino effect in Q4. So, although we have India, doing extremely well in terms of your growth story, the export might still take a while to pan out given all these things. So while we are quite positive on the recovery that India can face. But I think there is a credit event, not Indian, which can cause a massive downswing in these markets. And with FIs getting out of the market, it's not really going to help.
Right. Do you also expect a prompt strategic allocation from debt to equity at all because of these upgrades?
So, you know what? I think there is equity allocations are already happening with SIP strong flows. I don't see the equity allocation changing from debt to equity. Not immediately, because if we have another couple of rounds of rate cut where the FMS said that there is still more room to uh, cut, then I think the funds would wait for that, and then only after that move into equity.
Okay. Arpit, could you look at the markets therefore and help us understand what do you make of this initial swift slipping of the markets below 24,800, testing that level again?
So as at the start of the session, we talk about 24,800 is a major support level for Nifty.
Yeah,
But
yeah.
yesterday, as you see, Bank Nifty was underperforming, and today also we have seen a sharp cut in Bank Nifty along with in selective broader market level wise. So talking about Nifty, Nifty still is trading in a range, but that clearly indicates that 25,000 is likely to act as a major support zone. At the same time, the gap area that was built on the 14th August, a gap up opening above 24,700 to 24,850. So that is a gap area. And if we have to closely watch if Nifty doesn't sustain 24,800 levels in the initial 1 hour, then we can see some further weakness towards 24,750, 24,700 levels. At the same time, 25,000 would be a major hurdle zone. But if we talk about the major pain area, that has been the Bank Nifty, because Bank Nifty has given a breakdown below 54,900 after almost a couple of weeks, and this is where we have seen gross underperformance. So I think Bank Nifty is likely to underperform, and we can see further weakness towards 54,500, 54,250 with major hurdle around 55,000 levels.
Okay. Coming back to Vinit, I wanted to ask you on the broad IPO space, is any of the newer IPO, caught your attention? And, would you be able to help us understand about the two IPOs that are hitting the street today? There are many listings that are taking place as well. We have Shriji Shipping Global, Gem Aromatics, Vikram Solar, Patel Retail. All of them will be getting listed this week. And of course, we also see IPOs of Anlon Healthcare and Vikran Engineering, both of them opening for subscription. Any of these names that have caught your attention?
Actually, I would like to apologize that I have not been tracking the IPO market very keenly, because it's a flood, and to
Yes.
really dive deep into them and suggest something doing just kind of uh, how to
Sure.
put it. Yeah, so I
Absolutely.
just staying out of it right now, not advice,
Sure.
not suggesting any.
Okay, not suggesting any at this point in time. Of course, there is a flood. We've been seeing on an everyday basis 2, 3 more IPOs really being talked about, and it's very difficult to keep track of all these newer companies that are coming in until and unless a bigger company comes in that definitely catches the attention. But for now, there's no advice on that one. All right, Vinny, towards the end, before we let you go, help us understand, what is the advice that you're giving to all the retail investors from now till the end of this calendar year? What is the strategy to have? Which are the areas to concentrate on? What do you do with your fresh money that you have at your disposal?
So I think wait for the credit event to happen, uh, and it could be either in Q4 or it could happen in Q1 of FY26, but it's going to be devastating. So my suggestion is to be on the sidelines. But if you really are the kind of investor who would like to put money to work and uh, be there in the market, then focus on specific themes that we talked about in the earlier part of the show. That is the purely India-based themes, uh, FMCG, consumer durables, asset management companies, public sector banks, and agri and agrochemical industries.
Fantastic. All right, Vinny. Thank you so much for being with us on the program then and helping us all with your views on the markets, selecting for us the key core areas of focus and the strategies for investors at large. Thank you so much for being with us. All right, viewers, we'll start our conversation yet again with Arpit now. First 15 minutes of a candle is formed. Arpit, what has caught your attention in the first 15 minutes of trade? And it may be getting difficult to choose when the markets are trying to be in a profit booking mode.
Absolutely, Sakshi. If we've seen from last couple of days, market has been such ways where there will be few trending days, but rest of the days were very choppy. And look at the market breadth. Definitely, we have seen a weak advance return ratio, definitely in the favors of the bears. So over here, the strategy would be that few selective long ideas, but at the same time, for trading perspective, few short ideas as well. Because there are few sectors that are underperforming continuously, when there are few sectors that are outperforming. So we have to play as per the relative strength wise. And if you look at the sectors such as railways or defense, so
Yeah.
definitely in a lot of weakness. And in fact, from last couple of times, we've discussed also about the similar sectors where we have refrained to add any positions further before any major reversal wise. So I think this market is a classical combination of a long and short positions where new age, auto sector, and selective pharma names are outperforming, but at the same time, defense, railways, and selective reality stocks are underperforming. So you have to keep a bet within that space. As we discussed about the from the positive side of the FMCG also, relatively FMCG has been resilient in this market choppiness. And if you look at the chart structure of Britannia, so relatively today, in spite of market weakness, Britannia has opened a positive note, a kind of a range breakout on the daily scale, negation of lower highs. And I think definitely Britannia slowly, steadily can again head towards 57, 50, 5800 levels on the positive side. At the same time, if you look at the weakness side, so we would put from the railway space, that is RBNL, continuously in downtrend, forming lower high structure on the weekly scale from last almost 8 to 9 weeks, forming lower high low structures, fresh breakdown. So I think RBNL can be under pressure for next couple of days to weeks time, with major hurdle around 330 for a downside move towards 300 space.
Okay, fair point. I hope this has given you some sense, viewers, as to how to go about this space. What's on the weakness side? We see pharma is lower in trade. It's the top loser among sectors, 1.5% lower. Small and mid caps are also dragging in trade. A lot of stocks from these basket are also lower. Zen Tech, Reliance Power, again lower in trade. PG Electroplast is lower. Piramal Enterprises, Newgen, Action Construction, Swan Energy, Naveen Fluorine, Tejas. Most of these stocks are in fact trading lower by about 3 to 4% in trade today. What about the broader markets, Arpit? How are you dealing with the volatility and the weakness in this space?
So talking about the mid cap and the small cap index, in fact, if you see particularly I talk about small cap index, when you see some recovery in the mid cap, the large cap and the mid cap space, whereas the small cap was underperforming. And today I think small cap has taken the biggest hit as compared to the other sectors also. So I think definitely looking at the chart structure wise, mid cap and small cap is likely to underperform. And looking at the chart specific, definitely underperformance is likely to continue. But along with that, we have to, as we mentioned about the sectors, we have to pick up the sectors that are likely to witness weakness, and through that we can play it out. So we talk about defense, railways, and in fact, if you selective energy stocks are also quite looking weak. So if you talk about the chart structure of whether it's BPCL or HPCL, they are also looking quite weak. So you have to go from a top-down approach with the sector's weakness. Along with that, if you look at the chart structure of BDL, so I think BDL also has been underperforming, and definitely some more weakness can be seen along with the broader market trend. So I think weakness wise, BDL would be another short idea that we can go for. Trading around 1500, one can go short, keeping stop loss at 1540 for a downside move towards 1450, 1440 levels.
Okay, fair point. I hope that's the broader market view that you've got. Okay, Arpit, tell me from the FMCG space, which stock would you bet big on today? Across the board, there are gains. So Nestle, HUL are among the top movers on the Nifty. You have Britannia, Colgate, both of them moving up in the F&O space as well. And even below that surface, there are many others that are contributing to the gains. From the FMCG pack, where do you find the confidence for a sustained move ahead?
So first would be Britannia, as we already talked about. So Britannia, if we see the bigger time frame structure, is still relatively better on the
Yeah.
monthly scale. Kind of a hammer candle buying is visible at lower levels. On the weekly scale, it is consolidated with positive bias. So I think one would be Britannia with major support around 55, 50, 100, 55, 50 levels. Slowly, steady, the move can be seen towards 5900. Second would be from the counter space would be HUL. So HUL relatively after the GST news, it's seen a sharp uptick, but post that it was consolidating. some cool off was seen from the low levels. And I think from a range bound counter wise and from the monthly setup wise, definitely HUL provides better risk reward. Slowly, steadily, the stock can head towards 2700 levels with keeping major support around 2600 levels. So I think HUL and Britannia relatively looks better. That can go for with the steady returns.
Okay, fair point. I hope this has also given you some understanding there, viewers. Let's move across to some of the other sectors. Pharma index and healthcare space, this was in focus at this point in time, but again today there may be some pressure because Donald Trump government is again talking about tariffs on drug prices also coming in soon, even though they want to reduce the prices for US market as well as their own consumers. But there could be some talk about increased tariffs on the pharma products as well. How would you look at that?
So look at the overall structure. If you talk about actually, Max, particularly healthcare sphere has been a very outperforming sector in last couple of months. This was the first sign that we have seen some weakness in a few selective counters. But as I'm not looking at the chart structure on the monthly setup, I think there is some cool off. So we have to see where is the outperforming stocks are seen within the sector. And if you look at the chart structure of Fortis, definitely we have seen some cool off from the higher levels from 940, 960, 970 levels towards 900 levels. But overall, looking at the bigger time structure, it's definitely a buy and dips counter. So I think Fortis would be on one round radar where we can see buying strategy on the lower levels near 880, 890 levels. That would be a counter on radar. Apart from that, definitely we have seen very selective buying across the pharma pack. So it's better to wait and watch. And as we already talk about the ongoing issue, the US front because of the trade deals, so definitely the volatility is likely to be there. But having said that, the bigger trend of the sector is positive. So there's no major worry from the sector perspective, from a positional perspective. On the image basis, definitely there could be some swings going forward.
Okay, fair point. So that's the view there. Let me just ask you on the EMS place now. There is some contrasting trend. PG Electroplast for many days that was on a course to recover its lost ground. Amber Enterprises continues to gain there. From the EMS space, is there any stock that gives you the confidence to even invest at current levels? Remember, valuation is consistently being pointed out by a lot of fundamental experts on this space because this space has gone far outright. How would you look at that?
So if you talk about Amber Enterprise, definitely the stock is in strong uptrend, and clearly on the monthly and the weekly side of the stock is forming low, higher highs, higher low structure. So this month we have seen some cooler from the higher levels, but looking at the position setup, definitely Amber would be a choice that we can go long with a positional view. But the stock is sideways, so it's better to wait for a better opportunity near 7,000 levels would be a good favorable entry point for Amber Enterprise. Now talking about PG Electroplast, definitely this counter we would put an avoid because after the news that we have seen on the 8th of August, the stock corrected almost 25-30% in a single day. And post that, definitely there has been some uptick. But from a position perspective, the chart structure is definitely weak and it's better to avoid this counter. So I think given with the choice, Amber would be a preferred choice going forward with a positionally better setup in the account.
Okay, got that. So Amber Enterprise is a preferred choice there. Let me also dig in a little deeper and ask you on the IT pack. From last couple of days, we've been seeing a lot of focus there, Arpit, on the IT space. Do you think there is enough opportunity even now to invest? Because this was being seen as an oversold zone, where most of the investors have remained bearish for some time because of the overhang of US. And of course, what we've seen in the earnings, it was a washout quarter for the IT sector as well. But do you think this bearish kind of sentiment could now change or reverse for the IT space? What are you looking at here?
So actually, IT has been one of the laggard sector in last almost 6 to 8 months. Definitely from the last couple of days, we have seen bounce back move from the lower levels. But what important over here is we have to see within the IT pack where the outperformance is seen. And if you talk about the typical heavyweights company, so definitely the structure, some bounce back can be seen, but the bigger time frame structure is still trading in a range. One interesting idea that looks promising from the IT pack is e-clerks. So if you look at the chart setup of the monthly setup of the e-clerks, a strong uptrend give a consolidation breakout above 3,900, 4,000 levels on the monthly time frame E-class. Yesterday also have seen good uptick and then slowly steadily the base of the stock is shifting higher. So if you have to go for on a positive bias within the IT pack, E-class will be a counter to watch out for with major support around 4,050 for an upside move towards 4,500, 4,600 levels.
Okay, got that. I hope this has also given you some sense of how to look at the space as well. Let me now pull up some of the other key pockets that we haven't touched base upon so far. Let's talk commodities, for instance, oil and gas, metals, the core stories of economy. How are you looking at those spaces? What's happening here? We are seeing some sense of, some geopolitical concerns now shifting towards the back burner. Once that happens, what happens to these global stories of metals and oil and gas? Because all of the reaction that we see on these particular sectors is with respect to what's happening geopolitically, what's happening with the changing world order. Now that we are seeing some positive developments across the board, be it Ukraine, Russia, be it between India, China, how are you looking at these stories?
Look at the energy sector first as a whole. If you see, energy sector is definitely driven by the global flows and the global news also. So, particularly look at the chart specific wise, definitely we have seen underperformance. And if I look at the chart structure on the weekly scale, the sector is on the verge of giving a breakdown on the weekly scale below 34,000 levels, and that's clearly visible in the chart structure of many counters within the energy space. So, bearing few, all other counters are still underperforming. So, I think energy sectors looking going forward, a sense is that weakness is likely to be there and upside is capped. So it's have to be a very stock specific approach within the energy pack. We're not talking about the overall metal pack. If we talk about metal, has relatively been better, though it is trading in a range, but we have seen relatively outperformance within the metal index. We talk about stocks such as Hindalco or JSW Steel, where their stock is trading near life high territories. So definitely the outperformance is seen, but the market has been very much stick in a range bound kind of, and majority of the counters. So a sense of a metal index is likely to consolidate between the 3% up and below from the current levels, and the stock specific action within this band is likely to continue. So from a metal pack, overall a positive bias, whereas they're talking about energy sectors, definitely underperformance is likely to continue.
Okay, fair point. Viewers, one that you need to note that we've slipped below 24,800 levels. We are now down 200 points in trade. Two, you must look at the Nifty Bank that slipped about 500 points from the day's high too. So that's also under pressure. Three, what you should note is that from the IPO space, there are some settling of prices that are taking place on the newer IPOs that will be listed. Vikram Solar, one of the anticipated IPOs from the recent run that came in. The stock is settling at 340 rupees per share against the issue price of 332. So, slight positive listing is what you can expect on Vikram Solar, and about a 2.4% of an uptick from the issue price. So, just mild positive listing is what we are expecting on Vikram Solar. So, just wanted to point that out for all of you. Arpit, so help us understand Nifty Bank both slipping even further lower. What should be the strategy? Tomorrow is a holiday, so of course we get into 2 days of what happens overnight on the global trade, and of course in the global markets tomorrow as well. And of course the tariff impact will also be seen on Thursday. And how will you expect the markets to now move forward?
So as we have a monthly expiry after a day off, so definitely I think looking at the chart structure wise, it's better to go with option strategy rather than taking a naked position. And our sense would be that better to go through barefoot spreads. So particularly compared to Nifty to Bank Nifty, both would advise it better to go with barefoot spread. In Bank Nifty, one can go barefoot spread by buying 54,500 call, 54,500 put and selling 54,200 put at net cost around 60 to 80 points. For Nifty, if it closes below 24,800 levels, then similar wise we can go for barefoot spread in Nifty also with buying for 24,800 put and selling 24,650 put, because Nifty is relatively outperforming as compared to Bank Nifty. So I sense that 24,800 is the level to watch out for Nifty. If it closes below that, better to go with barefoot spreads for the monthly expiry. For Bank Nifty, if it closes below 54,750, then similar advice would be for both the instrument, because it's a holiday, and rather than taking naked position, the spreads and option spreads would be much more better to play the downside tick also for the couple of days.
Okay, so you could see an impact of the tariffs on the textile space, viewers. So we are seeing some pressure build up even today on Vardhaman Textile, Arvind, KPR Mill, Gokal Das Exports. These are the stocks that you should be looking at. Once the tariffs come into impact, there could be some knee-jerk reaction on these key stocks within the textile space. Of course, apart from this, there could also be spaces like, the fertilizer space or the auto components that could be in focus. because of the impact that could be felt on these particular sectors, because they have exposure to the US as well. So within the auto exports, look at a Sona Comstar, Samvardhan Motherson, for that instance, even though Samvardhan more has an export component to the Europe at this point in time. Then look at even names like Bharat Forge, for instance, those could also be in focus. Naveen Fluorine kind of fertilizer chemical names, that also could be in focus, because there could be some impact on that as well. These are the pockets that clearly have some exposure to the US with respect to exports. Arpit, what's your suggestion on these key sectors that we have been consistently looking at as those that will be reflecting first the impact of the tariffs?
So our sense that what is important is to protect your losses, and as we know that event is unknown and how it will play it out, that would be a very different story. So whichever stocks are there in the FNO segment, and if you have on the long side, it's better to hedge your positions by buying puts. And for the cash stocks, it's better to wait for some clarity. And once the news out, it's better to re-enter rather than taking the positions overnight and when we don't know the outcome. So it would be a very selective stock specific approach, and our sense with that better to hedge your positions agar any long positions within the FNO segment. And for the cash stocks, it's better to take the intraday swings rather than from a positional perspective. Once the news is and the market stabilizes, definitely will get better entry point and opportunities to play the long side going forward.
Fair point. Okay, got that. Arpit, thank you so much then for being with us on the program today and helping us with your view with respect to the monthly expiry, intraday trades, and of course the pockets that could feel the pinch of tariffs, and of course those that could offer opportunities as well in this market. Always a pleasure to host you. Thank you so much for being with us on the program.
Thank you.
All right, viewers, we'll start wrapping up the morning edition of Market Today now. We have slipped lower. We're at the low point of the day, down by 192 odd points. We've slipped below 24,800 odd mark on the Nifty. The Nifty Bank has seen a 600 point of a fall, on the markets as well. Across the board, where you see pain is real estate, pharma, broader markets, consumer durables, metals. What's inching higher apart from FMCG though is the IT pack. Slight gains that can be seen, but the gains are very, very mild. Look at India Wix, that's important to watch. 5.6% higher at 12.4 levels. So the volatility and the fear gauge is indicating some weakness in the market that could persist. FMCG stocks, Nestle, HUL are being seen as the top movers. Apart from this, two-wheeler names, Eicher, Hero, Bajaj Auto, these are also in focus. You also see some IT names now picking up pace. Remember yesterday's heroes now coming back into action. Tata Consultancy Services, TCS, that's Infosys, Wipro, all of them are also coming up. You can also see Eternal, that's making its attempt to climb higher. On the FNO pack, CESC from the power space is among the top movers, about 3% higher in trade. You see again the FMCG names Britannia, Nestle among the top movers on FNO space as well. Jindal Stainless is another one from the metals pack that's higher in trade. From the Nifty 500 movers, are there any names that we must mark? From the cement space, again, names like Andhra Cement is up in trade. Protein eGov, we've already marked out for you. Smart move of 9%. Moltech Tech Technologies is also higher. Let's also look at names like Yatra Online, that's higher. So I think it's the travel tourism space that could again garner some attention. Kesoram Industries is higher in trade. Those are all the names that are up and about. But paper stocks that were sharply higher yesterday are seeing some profit booking. So Malu Paper, and you do see some of the other names that are also slightly lower in trade. But clearly we can see that the markets are trying to see some profits being taken off the table, trying to keep sentiments lower with respect to the notification that's already come in from the US that a 25% additional tariff will be imposed on India starting tomorrow. That will take the overall tariff count to 50%. So far, no breakthrough there. Let's see what happens. And we'll, of course, keep an eye out on all the key sectors that could see the first knee-jerk reaction there. With that, we wrap up the morning edition. Do stay tuned throughout the course of the day. We'll continue to bring you the market updates and, of course, get you top market voices to guide you through these volatile times in the markets as well. In case you have questions about the stocks in your portfolio, ask them to us on our daily calls show that starts at 12 noon. Anshul Jain will be with us, one of our favorite experts on daily calls. He has a clear view about all the stocks, so join in at 12 noon for daily calls.